From Barangaroo Studios, this is the COB, brought to you by eToro. Invest in ASX shares with $0 commission.
Hello. This is the COB, all the stuff you need to know about the day in business and markets on this Monday, May the 22nd. Quite a quiet one here locally, on the macro front at least.
Yeah, to say the least. A little bit of corporate news out there, and well, there always is, and we'll get you through that. But yeah, it's a quiet start to the week. We were down very much. We'll have a look at the market now, because I think we finished off by about 0.2%, which, all things said and done, considering Wall Street's sell-off, wasn't all that bad, really. But again, light activity overall.
Yeah, okay, so we'll get you across the final figures for both the CBOE Australia Index and the S&P ASX 200 shortly. So, three themes. What were they today? Well, we've got a bit of a market tumble. I think tumble is probably overstating it a little bit, isn't it? A little dip to start. We've got markets really, though, on edge because of that U.S. debt ceiling. So the negotiations are supposed to start in the U.S. again today. Look, everybody says that it will get resolved. However, this brinkmanship, obviously, is going right to the end. I had a good chat with Isaac Poole from Oriana Financial Services. He said, yes, it is still a sideshow, but there could potentially be quite a lot of volatility this week off the back of it. Yeah,
well, and that's the thing too, isn't it? Markets work at the margins, they work on probabilities, and every day that this gets closer to X day or D day, whichever way you want to look at it, but well, it becomes slightly greater risk that something doesn't happen. So that's got to be priced in.
Well, you're sticking out everywhere here. Fix myself up a little bit.
Yeah. Got caught in a net.
I noticed just when I was coming on air that we're seeing some pressure coming through on coal and iron ore in China. So that's put a bit of weight on the local miners. Property concerns still over there. Now, that just gets me thinking as well about some of the communications that we had coming from both the Quad and the G7 over the weekend. The semantics, but it's called de-risking when it comes to China. Obviously, we would never say that we wanted to cool trade. Obviously, we wouldn't say that we want to ensure the dominance of Western nations when it comes to economic growth. But looking to sort of pull back a little bit and figure out how this relationship's going to go.
Yeah, from what I kind of gathered with the politics around it, very much trying to encourage, and I use that word very carefully, encourage China to perhaps grow within that rules-based system, which, since the end of the Trump administration and some sort of shifts in global geopolitics, the G7 are obviously trying to reinforce again as being sort of the guiding principles of global trade and global politics. So de-risking, we don't want to keep them out of the loop, but you have to grow the way that we want you to grow, perhaps. That seems to be the message.
Hey, there's always rules in place, isn't there? M&A, we'll get to that in the corporate stories. Let's just take a look at some of the sectors today. We had energy, really the best performing. So I thought we'd start with something positive. Positive when you consider that we've got, still some real concerns about global growth going forward. Infotech also did outperform, generally speaking, when it comes to the local market. And that's despite the fact that we did see, the BNPL names really tumbling. Hey,
Nasdaq was down too on Friday night, so quite resilient. Xero, close to $110 per share. Howdy doody.
Yeah, well, that's still a little bit of the afterglow from its results that came through last week. And I just wanted to flag that we get Technology One earnings tomorrow. Lots of people in the market hanging out for that. Kyle, the flip side though, REITs did not perform well, and you can see there, even those in the industrial space not looking too good. And telcos was also an underperforming sector. Telcos.
And, well, perhaps miners last but not least. Let's see if we can get the miners up by any chance, because they are normally the swing player on the market. Major miners there, and we got to fix that. No, we got to fix that bug in the system. That's not right.
Yeah, I was going to say. Also, Newcrest, I'm just seeing a bit of news coming out in relation to Newcrest. So it has got some big concerns when it comes to a dust off that I think this is rearing its ugly head again, really, saying that it will continue to work with members of the community and the EPA on the concerns that were raised. It's in relation to Cadia, and it's been issued with a draft pollution prevention notice. I guess that will be Newmont's problem in not too long.
All that handballing.
We will see, but there you go. So top corporate stories, Kyle. Look, Tyro Payments, Potentia walking away. Tyro saying it tried to work with them to get a better offer, but it's just obviously said to hard basket, done. shares down by 16%.
Yeah, not welcome by investors in the slightest. Big Tin Can Holdings, that's one that you homed in on pretty specifically in the small caps today, if I'm not mistaken.
Yeah, well, so Big Tin Can has had this private equity offer put on the table. The thing is, it's not keeping the market up to date. So there was media speculation yesterday, I think it was in the Fin, talking about this offer. Its board comes out today and says, yeah, it is an offer, and it's I think a 60% plus premium to its last traded share price. But this has sort of become a modus operandi from Big Tin Can Holdings, not disclosing these offers that have been made for the business. So saying it's not in shareholders' best interests, but look, we'll put in some calls to some shareholders, some investors in the company to see what they make of it. St. Barbara, again, on this M&A theme, we've got Silver Lakes coming back and improving the offer for that unit that it wanted to buy. The name of it just slipped my mind at this very moment.
No, because it's a hard name to remember, but that's interesting because there was speculation that might have been done as far as Silver Lake's involvement in that too last week, which I think, if I'm not mistaken, actually led to a bit of a rally in the Silver Lake share price.
It did.
So another chapter in that one.
Leonara assets. There you go.
I might name my first daughter Leonara.
Whoa.
That's nice, isn't it?
Yeah, we should
Nice,
talk
unusual.
after. We should talk. Do you have news? You got to. Anyways, City Chic again. It is just. Sales down by about 15% in the trading weeks of this period so far. Inventory not being. It's just having to discount. You've got to put all your stuff on promotion to sell it. It's tough. It's down by a further 6.4%, and then Zipco tumbling. Because of that increased regulation on BNPL, so they have to be treated, as if they're offering a credit product, and that comes with a lot more responsibility.
More onerous, isn't it? Yeah. At the risk of editorialism, maybe at the risk I'm just going to do it. It's probably overdue, I would say. I think it's fair to state that buy now, pay later has qualified as credit for quite some time. But one more regulation in the space, and you did speak to Peter Gray, who said, has said for a really long time, that we welcome regulation. This is a good thing.
Yeah, and he says that they're actually already compliant with this particular regulation. So I asked him why the share price was down 6.5% when I was speaking to him. He said, I don't know. Good question. Anyway, we thought we'd put that question to our guests on the call today. Gaurav Sodhi from Intelligent Investor and Mathan Somasundaram from Deep Data Analytics. Zip was the stock of the day. Let's take a listen.
It is funny how that's come out now. I think it's good. There needs to be a certain level of protection for the consumers because they can be targeted. Look, I think the horse has already bolted.
Getting into the sector at all.
No. Staying out of finance, especially any short-term debt.
I'm not convinced there is a sustainable business here. And it would be fascinating to see what Afterpay would have been doing as a standalone business, because increasingly it's looking like that this whole buy now, pay later segment was a fad that has now fallen. And it tells you how you need to invest to make money, which is to avoid fads, or if you're going to get involved with fads, recognize them for what they are and get the heck out pretty damn quick.
Yeah.
Furiously nodding in agreement
Oh
there.
man, it was a bubble. I was doing my talking head stuff a couple of years ago when everyone was asking me whether I should buy Afterpay or Zip or whatever it happens to be, and I was just like, well, if you want to have a punt, it's a greater fool.
Well,
theory,
a lot
I
of people
suppose.
made a lot of money on Afterpay. To Gaurav's point,
Greater fool. You just got to find someone else
sell.
dumb enough to sell it. But I don't know. Do we put the stake in the ground now? Is that the end of the bubble now that we've got the regulation?
Oh, yeah, I think the bubble ended when those share prices started to tank, didn't they?
Yeah. Well,
All right, let's bring in Josh Gilbert. He's joining us from eToro to find out what he made of the day that was. Because, Josh, I note that our market underperformed. We saw chip companies really helping to drive Asian shares higher. And it just made me think we've got NVIDIA reporting later this week. So there's still lots happening on the corporate front.
Yeah, absolutely. A bit of a poor lead, I think, from the local market from obviously US on Friday. Obviously, had a bit of a boost from tech today, which has helped to sort of prop up the index slightly as well. We obviously had the NASDAQ up 3.5% last week as well. We've obviously got NASDAQ futures in the green today as well already. But as you say, we had some positivity from Asia. I think a lot of that was coming through from Biden sort of hinting towards improving relations there. But I also think there's just a bit of relief there after some really poor performance over the last sort of couple of months. So, Hang Seng Tech today doing sort of really well. And again, I think we're looking to head to obviously NVIDIA this week. best performing stock on the S&P 500 this year. Obviously, most of the conversation for tech this year has obviously been around AI. That's what's been sort of driving that positivity for Nvidia so far this year. We had thousands of mentions of AI from big tech companies, talking about this sort of new technology that's sort of coming in. So the investor excitement for this technology is huge right now. And I don't think there's anything probably more exciting maybe than Nvidia. You could maybe question Microsoft as well, but Nvidia is really leading the race here in terms of chip technology. And so that's going to be a really interesting earnings to watch this week.
Yeah, there was a good episode on Odd Lots too recently too, it has to be said, just about how just like particular Nvidia's chips are just so well suited for AI technology. They've really cornered the market so far from what I understand. But you probably heard us before, Josh, just talking about the, I'll call it the buy now, pay later bubble. And obviously in a past life myself, seeing some of the activity from traders there as that kind of bubble took hold and the hysteria. I mean, have you seen yourself with eToro clients just a drop off in interest in some of those names now that, basically they've, this close to the precipice?
Yeah, absolutely. I think, Nadie, you made a great point then. As soon as those share prices sort of started to go down, I think that was sort of the end for it. We saw, obviously, for a long period there with those buy now, pay laters, that they were loved by investors just given how well that they sort of performed. But when that performance, isn't there, it does start to fall off. Then we obviously had that sort of conversation around, regulation. Can this last? Obviously, as soon as interest rates, began to rise, easy monetary policy ended. I think that's when investors really sort of, saw the end to these assets. Although, you may have the odd contrarian investor that might see a bit of opportunity for some of these names at these levels. I agree that, these are probably stocks that are going to struggle moving forward, especially with regulation coming in now. It may even be opportunities for some of the bigger banks to pick some of these names up. Let's see, because clearly it's a product that is loved, by the everyday consumer. So maybe there's some opportunity there. But yeah, I think investors lost a lot of love for it as soon as those share prices started to fall.
Mm. When you think of what is actually exciting shareholder or investors, traders, whatever, what's happening on the eToro platform, where are you seeing a lot of the interest?
Lithium. Yeah. I mean, look, it's the obvious one, but I think that, given what has obviously happened with the lithium price over the last couple of years, given how much conversation there is, around the energy transition this year, that is the main focus. We did a survey at the start of Q1, which was just looking at what themes retail investors were interested in, and clean technology continued to be the name that came out on top. So I think that lithium, I think, is more apparent here in Australia than maybe overseas. But we're even seeing a lot of overseas investors, wanting to get involved with the lithium space here in Australia. Pilbara has been a name that global investors are buying. So look, plenty of interest around that. I think we're also seeing AI, of course, is the sort of the real interesting activity there. Gold stocks have also picked up recently. We've seen plenty of activity there. We've also seen a bit of a move back to Japanese equities as well, given how well the Japanese market has done just recently, obviously surpassing 30,000 as well. So plenty of interest, within the last couple of weeks, for the Japanese market as well. That's got investors pretty excited.
Yeah, and we actually had a few guests talking today about how the developments over the weekend were probably very positive for some of Australia's sort of rare earths companies, maybe even overlooked a little bit today if you look at the lithium plays. But obviously can't leave the conversation without discussing macro, and we've got these debt ceiling issues overhanging the market. Clearly there's still speculation about what the Fed does next. So, I mean, if we are going to see a pocket of volatility, because as we said, volatility is relatively low still, if we're going to see that sort of pocket of volatility come, might be some of these issues in the United States?
Yeah, well, I think it's a pretty big week on the macro front for the US, even if we took the debt ceiling out of it. We've got PCE, we've got Fed minutes. So I think it's still a pretty big, week, even without the debt ceiling. The debt ceiling just sort of adds to it, I think, as well. Looked like we were making some progress there during the week. I think that sort of, curtailed a little bit on Friday. I think, though, from what I've seen today, Biden's on his way back to sort of the US. So it looks like talk should resume today. So hopefully there's some progress this week because if there's not, then that could weigh on equity markets if this sort of drags out. But as you say, markets I think have been relatively resilient. I think the catastrophe of this to investors, from the sort of the idea of that there is so much at stake here that it really doesn't make sense for both sides to sort of not really make a deal. But I think, you have Janet Yellen coming out to say that, that the US is unlikely to sort of get to I think it was the middle of June and still be able to pay its debts, and unless there something done here, which is obviously adding to a bit of uncertainty for investors. But I think if we look back at history, it shows that lawmakers eventually do get a deal done, and I think that's why investors probably aren't bothered. But if this does, increase, the longer this drags on, ultimately it just increases the likelihood of a sell-off in risk assets. And that 20% gain that we've seen from the Nasdaq this year could diminish. Obviously, last time we saw this back in 2011, we had the credit downgrades. The S&P 500, I think, fell by about 15 to 20% in about 10 days, and the VIX jumped significantly as well. So we're not quite at that point yet, but it's certainly a scenario that investors are beginning to believe that could be a possibility, especially as this week draws to a close.
Josh, obviously a quiet day ahead of a very interesting week. We really appreciate you shedding some light on it. So we'll leave it there, but we'll talk again as the week goes on. Josh Gilbert there from eToro.
Thank you, Josh.
Thanks, guys. Cheers. Take care.
Okay, let's get back to equities and just take a look at some of these leaders and laggards.
Let's start with those leaders, shall we? And top of the pops. Here we go, BrainChip Holdings, and I was having a look at this at the end of the last hour of programming, so at the close, and I was sort of ad-libbing trying to find a reason why it was up.
Well,
could you find one?
No, it's always, it's a very volatile stock, right?
Yeah.
It was the best performer on Friday as well. I didn't see any news associated with it yet again today. However, I believe they're holding an AGM tomorrow, so I don't know. That's all I can come up with. Kelsian Group, this is an interesting one. I'm not even seeing any broker moves on it. It is in the travel, tourism, but also public, what do we call it? Public travel, public transport space. Oh my God.
That's right.
It's up by 3.4%, but it is one of those small caps that does get mentioned pretty favorably by a lot of my guests, at least. Nanosonics, again, not any news, Sims. And then Centos up by a pretty solid 2%. Again, not really associated with any big news.
No, you sort of wonder how much activity is actually going through the market when it really is just the sort of marginal speculator pushing prices maybe a little higher than the fundamentals would justify. And well, let's see if that applies to the laggards perhaps, because we said it a few times, and I wouldn't mind quoting, or referring to a conversation I had with Brodie Howell from Macro Capital today, talking about how big a development this agreement between the US and Australia was over the weekend when it comes to rare earths, and how investors haven't really seemed to have, perhaps discounted that into the price, or it hasn't really shifted sentiment much. But it's pretty big news.
It is, but it's an interesting one because you mentioned lithium. Critical minerals is what it was really about on the surface, but then you get hydrogen in there. I just actually think it's so big and there's such a lack of detail that it's difficult to go out and really buy just based on that. Who knows? Maybe perhaps we'll see some further detail come, and that will give us a more focused view as to which companies may stand to benefit from this. But lithium's been on such a tear, and so it's not actually that surprising to see a little big give back there. And Imugene was one of the best performers on Friday. Now we have had a broker come out cutting its price target by 40% to 21 cents per share. I'd actually like to read that note from Bell Potter on that, because the news was that it got FDA clearance for a trial to go through on its oncolytics program, which was taken as really positive news.
Yeah, well, I suppose it always is when you get those sorts of developments, but still trading at a discount, I suppose, 12 cents versus 21, but fairly significant drop there perhaps. And I guess that all the other four names we've gone through them ad nauseum, rare earth plays there, just cooling off very, very slightly. Here's your time to shine. And the small cap's your favourite.
Come on. Gentrack, it was out with results. A New Zealand company. It does a lot of the software platforms for billing processes for water and energy. Am I impressing you yet, Cal?
I'm
Up
always
by
impressed.
26%. If you want to hear some analysis on it, I spoke with James Garish from Shaw Partners and Market Matters earlier today. That's up online. Big Tin Can, there you go. Clearly, hoping that there will be an improved offer coming and the board will actually disclose and recommend it, up by 14%. Some of the laggards, Rhythm Biosciences, don't know if you remember, it was up by 88% one day last week. So just giving some of that
One
back.
of Danny's favourite
And
holdings. Yeah.
Gallon Lithium, so it did a discounted placement and it is down by 11%, but it had a big insto. I mean, they raised like 32 point something million, so it's not an insignificant amount of cash. And of course, it was a negative day for lithium as well.
Yeah, for sure.
Did I earn my dollars today?
I mean, every day, of course. But there was a really good one there. I think it was called Dreadnought Resources. Yeah, have you heard of that one before?
No, but
I feel like that should be like a metal band or something like that. Dreadnought.
Sure. What was that other one that a couple of weeks ago was always one of the laggards or the leaders? Oh my gosh. Jervois.
My favourite. I still haven't invested in that. Need to find the
We're
extra
going to have a
500 bucks.
Kyle's list of stocks just based
Just
on
has
names.
nice names.
Yeah, we'll see if we can
That's
call it
about
an
as-
ETF or something.
That's about as deep as my investing goes.
Don't say that, but he does do a little singing in the COB newsletter tonight, so you will
Are you going to
want
let me do that, are you?
Yeah.
Yeah, that
Yeah.
wants to go.
I thought you meant sing it. I was like, don't do it now.
Don't
Do it now.
Don't do that. Okay, cool. No, that's going through. Yeah, read that. I
Yeah,
think
no,
that's
that
one of
got
my
the
best
big
bits
tick of
work.
approval. All right, tonight, look, we know that it was very quiet on the economic front here today. We've got Eurozone consumer confidence, we have ECB speakers, and we've got Fed speakers as well. So that gives us ammunition for tomorrow.
Yeah, definitely. And well, we'll wait and see what the cacophony has to say tonight. But here we go. This is tomorrow. Our Technology One earnings. That's going to be really interesting for the tech space, especially the run-up in prices that we saw today in the tech sector. A brain chip you just mentioned before, also something we'll have to keep an eye on. And flash PMIs.
Yeah.
Had a really interesting conversation with Stephen Tooley today, just talking about the divergence between global manufacturing and global services activity. Obviously, central bankers concerned about why services activity is so resilient and perhaps making their job harder.
So I always check what's breaking, before we wrap up this podcast and this program. And I'm just noticing that energy, the best performing sector, as we told you here locally, we're watching Brent crude futures and US crude futures falling by about 1%. As we speak, and that's on top of some of the pressure that we saw coming through for coking coal and for iron ore. So we've got those debt ceiling talks resuming. That will definitely be a really big talking point. And then sometimes you see these headlines come through on Reuters, and you just think it just speaks to these themes, and one of which that I just saw, if I can find it, is that the Democratic Republic of Congo's president is paying a visit to China. So says the ministry there. So again, it just speaks to that that economic influence that the Chinese are having, and that obviously some of these Western leaders are trying to counteract.
Everyone's just trying to set their own little debt traps for everyone, aren't they? And just sort of to tumble them into. Isn't this geopolitics at its finest?
Yeah, I saw something else that I thought was really interesting. Volvo receiving record orders for up to 1,000 electric trucks. So you get all these headlines, and I wish we had time to delve into them all, but we've just got to make some choices around here. What we always cover in depth, in detail, is the local market. The S&P ASX 200 finishing down 0.2%, as did the CIBO Australia Index, and the final figure for the S&P ASX 200, 7,263.
There you go, another day in the books. And well, if you want to catch up on everything that you, would have seen today if you were tuning in, make sure you head to the website and app. Otherwise, we'll see you tomorrow morning.
Have a good one.
The COB is brought to you by eToro. Invest in ASX shares with $0 commission.